let's get rolling. Jerome Powell, what happened? What went wrong? Let me break this down as simple as possible. Here's the deal, okay? So, to put it as simple as possible, Jerome Powell here today said risks to the economy have gone up. He also said risks to inflation have gone up. Both those are not things you want to hear. Okay, you don't want to hear about, the economy is getting riskier and, we're more scared about things going south here and, unemployment spiking, things like that. And you also don't want to hear any problems with inflation, right? And he said risks to both of those have gone up. Now I ask you, what does that sound like? And anybody that should have taken Finance 101 class, okay, anything macroeconomic related in college, you should know exactly what that sounds like. It sounds like a little something called, it's an ugly word, it's one of the scariest words in all of economics that you'll ever learn of. It's called stagflation. Stagflation is an economic condition characterized by simultaneous occurrence of stagnant economic growth, high unemployment, and rising prices, which is inflation, right? It's a situation where the economy is struggling to grow, unemployment is high, and the general price level of goods and services is also increasing. Now, he refused to say the word stagflation in the press conference here today, but at the end of the day, when you heard that man talk here today, it sounded like he basically is saying the risks of a stagflation have picked up quite immensely, right? Like not a small amount, but he's definitely worried about both, right? And that puts you in a tough situation if you're the Federal Reserve, which you're always trying to figure out, should you raise rates or lower rates? Well, here's the deal. If you're worried about the economy, usually you would say, okay, we got to lower rates, right? But if then you're also worried about inflation, then you say, well, we can't really lower rates, because if inflation is going up and booming, then how are you going to lower rates into that environment? That makes it a very tough, decision for somebody like Jerome Powell to make here, right? Now, you might say, okay, well, the one thing we don't have, even if the economy's slowing and let's say we get into a stagnation in the economy, let's say we still have inflation, but you say, well, the one thing we don't have is high unemployment. True. But here's the deal. The evidence is clear at this point in time that we're in an uptrend when it comes to unemployment. It's not a debate. You look at the chart, it's a clear uptrend, right? You didn't have to see a million charts in your life to be able to see, that's trending higher and higher and higher, right? So we clearly have evidence, and that's something that you might say, okay, are we leading into a stagflationary type environment, right? Now, the much scarier part of this whole situation, right? This was way scarier to me personally as I watched this press conference. And this is where things really went south, in my opinion. And this is very, very problematic. And I mean extremely problematic. Here's what happened. So basically, Jerome Powell was directly and indirectly asked a few different ways how the Federal Reserve is going to know, when to make their next move and what that next move is, right? And Jerome Powell could not give a good answer to that. He basically sounded like, I don't know, like we'll just know when we know. That was kind of the gist of it. And I don't think that's a great response. He did not lay out a clear cut, like, well, if this happens, then we're going to make this. He just kind of left it as like, well, we'll see, how all this shakes out. And he sounded as uncertain as an average American about what's going to happen, how things are going to transpire from here. And that's troubling, right? It's one thing if a Wall Streeter goes on CNBC and they're uncertain, right? It's one thing if an average Joe is uncertain or a business owner is uncertain about, they're kind of confused on where things are trending here. It's a whole different dilemma when the man leading the Federal Reserve is basically like, I don't know, we're going to see how it goes and then we'll figure things out as it goes. Oh my gosh. And what that basically then tells you is the Fed is going to lag again. They're going to wait till something big has occurred and happened, and then they're going to make their move. What is the one thing the Fed's always blamed at being it? They're always blamed at being too late, right? And they were too late in 2022 to make adjustments, right? They should have been making adjustments in 2021, and then we've got out of control inflation in 2022, right? And now we got this situation where you're clearly seeing a weakening of economic data, right? And the Fed's basically kind of like, I don't know. Like, we're not seeing enough to really like make a move here. We're uncertain. I don't know. Like, we're going to see what happens with tariffs. It just doesn't sound like a confident Federal Reserve, and it doesn't sound like a confident Jerome Powell right now, right? Now, there's a general rule of if you what is a reason to raise rates or lower rates, right? We can go back to inflation, but there's kind of like a unwritten general rule that if you have an overheating economy, which does happen from time to time, where the economy gets too hot, right? And an overheating economy is actually a risk. You might think like, no, there's no such thing as, yeah, there is actually a such thing as an overheating economy. An economy that could get too good, where what happens in an overheating economy is inflation starts to go out of control, right? And additionally, in an overheating economy, you can start to have a lot of bubbles form in different areas. Sometimes it could be real estate, sometimes it could be stock market, could be, I don't know, nowadays it could be crypto. It could be all types of different places, right? Now, if you have an overheating economy, the general rule is we need to raise rates because we actually need to cool this economy. And so think of it as like putting water onto a fire, right? An overheating economy is like this fire that's going on, and we're going to dump a massive bucket of water on it by raising interest rates, right? Now, additionally, if you have a slowing economy, right, the general rule is if you have a slowing economy, things are getting worse and worse, right, you need to lower your interest rates to kind of spark up that economy. So let's say we're trying to have a fire here to keep ourselves warm at night, but the fire is kind of dwindling a little bit. Well, we better put some more wood on that fire, right? Let's get this baby going. And so let me ask you, do we have an overheating economy right now or a slowing economy? Well, here's the type of things we're hearing. The Taylor Morrison CEO, which is one of the biggest home builders in the United States of America, went on CNBC this morning and she said, we're not seeing a typical spring surge that we usually see, right? The housing market, the home builders are usually doing great numbers in April and May, and like that's their boom time. Everybody that knows anything about real estate industry knows that's boom time, springtime. Well, here's the problem. If you got the biggest, one of the biggest home builders out there saying, we're not seeing it, man, what does that sound like to you? Does that sound like you got an overheating economy or a severely cooling economy? Sounds to me like a very cooling economy rather than an overheating economy, right? If she was saying like, demand's insane right now, like everybody and their grandma's going out to buy a new home, then we can say, oh, yeah, kind of an overheating economy. It's not at all what we're hearing, right? This is Tesla's numbers. Keep in mind, Tesla's supposed to be a mega growth company. Supposed to be, right? Tesla's automotive revenues were down 20% year over year. Now, some of that could be blamed on the Model Y switch up, blah, blah, blah. 20% is 20% down, okay? Even if that switch doesn't happen, the number still would have been a disaster. Total revenues of Tesla were down 9% year over year. Does it sound like an overheating economy if Tesla, a company that's supposed to be mega growth, has revenues down almost 10% on a year-over-year basis? Doesn't sound overheating to me. Sounds like very, very cool, right? You look at Ford's numbers, right? Ford's revenues were down 5%. Now, this is way before the tariff stuff and all that, because this is looking at last quarter, right? Which ended in March. So this is before all the tariff stuff. So you can't even blame this on, well, all these tariffs are coming on. No, this was before this. So who knows? Maybe, could numbers get worse over the next quarter or two for some of these companies? It could. It's a potential, right? But if Ford's revenues are down 5% year over year, does that sound like an overheating economy, or does that sound like an economy that's getting a little cold, right? Wynn Resorts. Keep in mind, Wynn Resorts really caters to the high-end, top 10% income earners, top 10% wealthy. It's not like they're, catering to people that make $30,000 a year, right? Wynn Resorts. Does this sound overheating, or does it sound like it's getting cold? The casino business was down about $80 million on a year-over-year basis. Room revenue was down around $50 million on a year-over-year basis. Food and beverage was down $15, $16, $17 million year-over-year. Entertainment revenue was down about, $12 million year-over-year. And total operating incomes came in at $1.7 billion versus $1.86 billion. So down about, $160 million on a year-over-year basis. Now, some of that you could blame on, the Super Bowl wasn't in Vegas this year like it was last year. Okay, we can play that game. Okay, maybe that hurt a little bit. But still, $160 million is $160 million down year over year. Does that sound like the economy's overheating or getting a little cold here? So the moral of the story is the Fed should have lowered today. The Federal Reserve should have lowered rates today. No question in my mind. They should have, right? They chose not to. They're choosing to wait till other things happen to see, right? Now, I'm also sympathetic to the Federal Reserve in the respect of, the tariff stuff and what Trump's going to do, we don't know. But here's the deal. And Jerome Powell has dealt with Trump before. Trump's going to make, some big things, do this. And then, some stuff's going to be backtracked. It's going to be negotiated out. Boom, boom, boom. And all of a sudden it's like, oh, that wasn't even a big deal. We already seen Trump before. And I already said, with Trump, don't make your investing decisions, don't make your decisions based upon what Trump tweets or what he says, oh, this is going to change or that's going to change. It's going to be drama. It's going to be drama for 3.5 more years, okay? That's going to be that. Cool. But don't make your decisions based upon what Trump is going to do or not do in the short term, because that's going to work itself out. Here the Fed is, I believe they're making decisions based upon fear of what Trump's doing or not doing in regards to the tariff situation. And it's just not the way they should be managing policy. I believe if this whole tariff thing was not going on, I believe the Federal Reserve would have lowered rates today. But because they're scared of what's going to happen with tariffs and what does that mean for inflation, they chose not to. And I think that's a huge mistake. And also, the Fed can't play it both ways. If the Fed wants to say, we're only going to look at the data, okay, only look at the data. The data's telling you inflation's dead. Where are we seeing inflation? Inflation's dead. It's been dead. Look at GSG, pull up the commodities basket. It's done for, it's dead. The only thing you could have is fear of inflation coming back because of Trump tariffs. But that's an opinion. Are you data dependent or are you opinion dependent? You can't have it both ways. You're either looking out to the future or you're looking in the past. What are you doing? And so all of a sudden now they want to play both sides. You can't play both sides. And like I said, I bet you any money if the Fed, if Trump didn't have all this tariff stuff going on, the Federal Reserve would have lowered today. But they're worried about all that. And it's like, dude, you can't be looking at the past and looking at the future and then, act like we're only data dependent. No, you're not. The data says lower rates right now. The data says lower rates. Did you see the latest GDP numbers? And then you can make well, that's because of this and that. Dude, how many excuses are we going to make? How many excuses are we going to make for things, cooling? And at the end of the day, you got to be able to look at it and say, you know what? We should be lowering right now, right? The housing market numbers. Has anybody seen the housing market numbers? The housing market numbers are at great financial crisis type levels. And think about how many more people live in the United States of America now than back in the great financial crisis. And yet we're back there during a housing crisis for how bad the sales numbers are. Look at the data, man. If you look at the data, it says lower interest rates. They should be lowering. They should have lowered 50 basis points today. They should lower another 50 basis points in probably a month or two from now. Get lower in rates. But, they're going to try to play this game, and it is what it is, right? The only two companies that are big companies that are honestly putting up beast numbers are NVIDIA and AMD. Look at NVIDIA's numbers are going to be a banger when they come out here. And when is the NVIDIA numbers coming out? Probably a few weeks from now. NVIDIA numbers are going to be a banger. AMD numbers are an absolute banger. Those are really the only two big dog companies putting up beast numbers right now, right? That are just wow, look at that revenue growth. AMD's revenue growth was 36% or so. NVIDIA's revenue growth is going to be incredible, probably 50% plus. Other than that, you don't have any companies that are reporting such great numbers. You're oh man, wow, business is amazing right now, right? Now this is going to lead to what I told you guys is coming, which is a big fight with Jerome Powell and Trump, and it's already started, but it's going to get much more intense. Okay, much more intense. The longer the Fed wants to play this game, the more this man's going to get mad, and it's going to be a whole situation. Okay, so. That's that. Revolve and Google McDougal. And by the way, am I making any investment decisions based upon the fact that the Fed is clueless right now and as uncertain as an average American? The answer is Absolutely not. Don't care. Don't care. It is what it is. The Fed's going to do what the Fed's going to do. They're going to screw up. That's fine. They do that. Trump's going to do what Trump's going to do. That's fine. That's going to be what that is. The government's going to do what the government, like, that's just what it is. I never make my investment decisions based upon the Fed getting it right, getting it wrong. At the end of the day, like, they're going to do their own thing and we'll figure it out, right? Just like the Fed does. Hey, I want to thank you so much for watching that clip. I hope you really enjoyed it. What I'm showing you in front of your face right now is 1000xstocks.com. This is such an important website and service to use if you want to research companies, if you want to understand companies on a high level, so you can hopefully get better results in the market. And we know as the years tick on, money compounds. It is so important you research companies, you compare companies, you're listening to conference calls, looking at SEC filings. All that's included into 1000xstocks.com. So to enjoy 1000xstocks.com and to apply for that service, you can go to the description area of this video, or you can go to 1000xstocks.com, whichever you prefer. Okay, next one up here. Ed Yarn.
Is this some form of vindication for Powell waiting thus far?
Well, absolutely. I was not expecting that there would be a Fed rate cut this year, and I still think that because the U.S. economy is very resilient. The consumer hung in there extremely well over the past 3 years when the Fed raised interest rates, and now the consumers held up, I think, quite well with the tariff uncertainty and capital spending. For all the concerns that uncertainty would put a hammer to capital spending, the reality is technology capital spending, which now accounts for over 50% of total capital spending, remains very strong.
So maybe it's a counterfactual. Could you say it's a win in the Jay Powell camp, but maybe also a win in the Trump camp, in that the economy has held up, I think, a lot better than had been expected?
Right.
I don't know if you read, I think he's a good friend of yours or a friend of yours over the years. You've read him. Greg Ip had a piece in the Wall Street Journal this morning saying, you know, the outcome of what took place yesterday might be where you want to be. How we got there might not be how you want to get there.
I don't understand this notion of like the economy, you know, this and that. Listen, sometimes these folks make it sound like the economy has been like some crazy boom times. It's not. Have you seen home sales demand? Have you seen furniture sales? Have you seen the amount of people? Like, if you ever want a really good indicator to look at of how hot or cold the economy is, I'll give you one of the most important factors you could ever look at. How are people moving jobs? When people are moving jobs, that means the economy is actually very strong, because there's plenty of jobs out there. They can go find other jobs, other opportunities. They can level up, things like that. When people aren't moving jobs and they're staying with the same company year after year after year, very negative sign. Very negative sign. It's usually a sign that things are rather cold in the economy, because they're kind of like, there's not really those opportunities out there. I'm just trying to stay put at where I'm at because, you know, I don't know, there's not those opportunities. And if you look, the amount of people like switching jobs has been really bad. Like I pay attention to a lot of restaurant companies and whatnot, and they've had a very easy time for at least this past year or so keeping their staff, because there's just not a ton of other opportunities out there right now. So, you know, this like notion of like, oh, you know, things have been so great and resilient, blah, blah, blah. I'm like, you know, just because things are okay does not mean the economy's great. That's an important thing to understand, right? Like, there's levels to how good the economy really is. And you'll know you're at a really, really strong, really good economy when people are moving jobs quite often, because there's that many opportunities out there, and we're not in that.
Having said that, it also appears that this economy has been so strong in some ways that we've managed to get there despite all of that. Meaning, what would have happened had we not been approaching these tariffs this way?
Andrew, I've been doing this for a few years, and one of the things I've concluded is that it's amazing how well the U.S. economy and stock market do despite Washington. So we're all paying a lot of attention to the headline news on Washington. You folks do a great job of covering the political developments and the economic developments coming out of the Beltway. But the reality is, the rest of us working stiffs do a really good job of keeping the economy moving forward and figuring out how to live with the government's meddling.
in terms of CPI, what's your expectation?
I think the headline will be 0.2. I'm expecting to see some moderating impact from energy prices. And at the same time, if you look at core, I would expect to see 0.3. But even if it turns out to be hotter than expected, I think the market will attribute it to the tariff situation. We know that used car prices, for example, jumped in April, and that probably had to do with the 25% tariff on imported cars having an impact on the entire auto industry. So I think the market would I think the market's already looking at 2026. I think the market's concluded enough of this noise. Let's see where we're probably going to get signal and good signal, and that'll be later this year into 2026.
So we don't need to worry about no one ever buying a treasury again, or a capital flight out of the U.S. or none of that happened.
Yeah.
Or do we see it? Or do we see it? Remember the last jobs number we said this would be a big jobs number. Unless
holy smokes, to speak about big, who is this, Barron Trump? Holy smokes, look at this man. He's taller than
he's not. And the next one is a big. Are we never going to see any of the adverse effects of the uncertainty? I thought small businesses were closing and.
Look, I think there's a lot of scary stories.
You know what? This just proves the point I always make to you guys, right? What do I always say? The stock market many times can dictate the sentiment of all these individuals, all these Wall Streeters. All of a sudden now they're talking about, oh, the economy is so resilient, the economy is so good, Fed doesn't have to lower. Dude, a few weeks ago, and nothing has changed in the economy in the last few weeks. Nothing. The stock market's changed in the last few weeks. Nothing has changed in the past few weeks in the underlying economy. But go back a few weeks ago, and worries out through the roof about the economy and where things are going and weakness and blah, blah, blah. But the stock market all of a sudden goes booming and all of a sudden, it's so resilient. Oh, the economy is so strong, blah, blah, blah. Nothing changed, dude. Nothing changed. It's the same economy it was a few weeks ago. But man, did their opinions change.
About what tariffs would do. And certainly if the president hadn't postponed the tariffs and basically changed his mind, I think we would have some problems. With regards to your question on the dollar, the U.S. is the largest capital market in the world. There's nothing like it. Sure, we've got a lot of debt, but people have been buying that debt because they do want treasuries. So no, look, the worst that can happen in the treasury market, as we saw in 2023, is yields go up to levels at which people want to buy them. And they got up to 5%. People wanted to buy them, and before you know it, the yield came right back down.
I mean, weren't you at 7,000, Ed?
Yeah,
it got you to go to 6,000.
Sure, and now back to 6,500. I think
It's whipsawed.
Well, I don't look at it that way. I've written that I reserve the right to change my mind about
based on putting them on, taking them off. Yeah, putting them on.
Yeah, it's been.
Can we say this? You think China was much more affected than we were? Do you think that's one of the reasons that it's paused? Or?
Well, this is it's such a short time in which all this happened, so I don't know that there was any immediate consequences, but I think there was a recognition in China that it would hurt and hurt badly, and so they reciprocated in a hostile fashion to Trump's tariffs. I think everybody decided that this is not a good issue to have prolonged. I think this administration wanted to get this tariff issue behind them by the middle of the summer. It looks like they're doing it ahead of schedule.
The 30%, do you anticipate that staying, or you think it's your 6,500 kind of has that falling to 10%, the basic floor that Treasury Secretary Besson has laid out?
Well, look, I think we are going to 10%. I think Trump wants to declare a victory that tariffs are good, and a 10% tariff is already generating, in April, it generated customs duties that were almost at a $200 billion annual rate. So that helps. This administration needs to find ways to generate more revenues and slow down the pace of outlays. Everybody knows that the federal deficit is not on a sustainable path. So I think at the end of the day, we are going to see that the the minimum tariff is 10%. In some cases, that could be eliminated if we're happy with the deal that the other side brings to the table.
Yeah, who is losing more, U.S. or China? Like, that could be debated back and forth. But at the end of the day, both sides, both sides have to pay. And if they kept the tariff rates, obviously the way they did.